Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Gold has not been. We got to talk about gold because gold is the new VIX. So this is one thing that actually client George had posted some charts and I wanted to show those to you because that is the one sector that is obviously hot fire flames. And let me show that one again because I think that really is. No, gold is the new VIX.
Gold is the new VIX, but
yes, but I hear what you're saying.
VIX, but it's like people look to sort of get into they cannot look to the safety of the long bond anymore, and so I feel that it's kind of drawing that sort of safety hedge, that ballast that people look for. I mean, I don't know how long we've been going with the 60-40 portfolio getting kind of trounced, over the years. People still believe in that long bond, but really the divergence between gold and the long and TLT is quite incredible to behold.
It is, but let's show a chart on this because I know this is going to be a big question by some folks. Now, gold itself has a lot of reasons for moving higher. We have fiscal spending that's ballooning. It's not going down. We have geopolitical risk. We have trade wars, and it is the new VIX. And it really is not just gold, but also gold miners, for example. And gold miners have a double benefit going into earnings season because oil costs have fallen and 40% of their operating expense is in fact energy. But even Jeffrey had said a while back that metals could blue moon. In other words, miners in rare occasions actually outperform their underlying. And this is a situation where devaluation is absolutely stimulating this, advance in miners. And you can kind of see that with the dollar, which is just dumping, man. It is just still incredibly unsafe. So that's the money goes home scenario I've been talking about since February. This is the money stays home scenario also. They're not coming back into the US. Actually, Powell, when he presented today in Chicago, mentioned that the policies that are underway right now, even though they don't see intervening anytime soon because they haven't seen it in the labor market and because it would be, inflationary. But the point is, he did talk to a few things, which was this is not a very good jurisdiction for investment, which is another way of also saying money, stay away. So even he's on that bent. But George is someone who put together and sent this, and I wanted to ask your opinion about this. Speaking of which, since you have some charts to show, this one is of gold volatility, and I know you love these volatility skew charts. I want you to comment on gold right now because it is the only sector that's really moving strongly higher. I won't go into all the reasons why, but I do want you to comment on where to from here since it is so wicked extended.
Yeah, that's an amazing flip and skew right there. We've actually seen that people push into the put side on TLT as well, but nowhere near the extreme kind of flip that we've seen here. I mean, the TLT makes sense. People are convinced that we're going to get those higher rates as opposed to lower rates, which really kind of throws a whole wrench in what Trump do. Gold is very interesting. I mean, this tends to be a little bit more normal in gold.
So I would say that dramatic flip in the skew in gold is so pronounced that I feel that it's a little bit a sign of exhaustion, right? So it's a sign that some people are offside. They're the shorts are probably looking for ways to kind of minimize the further upside damage. So they're rushing into calls. So they're buying any calls they can get, which really pushes up that upside skew. So I would sort of guess that this is maybe a little bit of a sign of exhaustion. We're breaking all the lows we've seen over the last few years in terms of that short-term skew. So it feels a little bubbly at this point. But again, for a few weeks now, we've been kind of talking about, well, is there sort of a top in gold here? I put on a 1/2 put spread, a ratio put spread, and it's fine because I like it when things actually go the wrong way on those put spreads, because now you're long one put, you're short two puts as an example. And as we move away from the market, away from the sort of tent, you can actually, those short puts actually drop in value. So eventually you buy those back, even though, and the skew is going to help in that sense. Put skew is kind of receding a little bit, and you buy those puts back, and now you're sitting on very, very the long part of the strategy, which is very inexpensive because you funded the long puts with that short one. So the put ratios are kind of fun in a way because either gold goes down and then sits in this pocket where time sort of takes care care of things and you sort of make a little P&L there, or it goes completely against you. We did one months ago on MSTR, which we talked about, which went completely against me. I ended up with 3 puts on MSTR that started to gain some good value. I didn't sell them, and then they sort of went to waste. But I love free puts, and that's one way you can do them. I'll set one up for folks a little bit later. But yeah, it feels a little bit like a sign of exhaustion a little bit. I don't know if you would agree, Samantha, because it just keeps going and going and going. It's a bit parabolic.
So this is the problem. This is the problem, is that the more parabolic it becomes, the more fragile it represents the rest of the market becomes. So this is the new VIX, it's the new bond, it's the new, money flow. And that is actually a sign of much more instability. I've written about this a lot for clients, not gold per se. This has been a very strong trend long since last year. Gold broke out in March, silver in April, and it has just stayed incredibly buoyant. Silver is more industrial than, gold, transactions, if you will, settlement in gold, hoarding in gold, seasonality in gold, macro malfeasance gold. I mean, it's just earnings, gold miners. There are so many reasons right now to be long gold and silver. The problem is it is a wicked, crowded trade. In fact, I was showing that to clients this morning. I probably don't have it right front and center, but the point is it's extremely, where Mag 7 used to be the leader of the crowded trades, it is now gold by a nautical mile. So you know what happens with crowd psychology. It is only when they get a reason to sell that gravity can take hold. Otherwise, also in prior instances where we've had parabolic runs in miners that have gone on for many, many months. So even the junior miners run by taxi drivers, it does not matter. They will still go hot and heavy. So this is the problem, is we get this speculative asset that becomes the de jour protection, and everyone's looking for protection. So even though earnings are going to come out and they're not going to be so bad because the bar has been lowered for 17 weeks, week after week after week, the earnings bar has been lowered. Banks just started. They actually beat. That's not surprising. The problem is guidance. And then United Airlines comes out and says, we're going to give a recession guidance and a non-recession guidance, right? So everyone's kind of like couching their bets. Gold is the one side of the coin where you know what you're going to get. So they're going for safety. And I would love to say there's a top here, and I don't ever recommend shorting all-time highs, which is what we've got. And I also don't recommend buying all-time lows, but things can become really explosive with gold. In the case of sell-off, I don't see any signs except extended.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to 𝐬𝐿 Trading YouTube channel for more content.